Imagine risking it all. 300x leverage, a perfect short entry on Ethereum, the charts lining up, the timing spotting, and after all that risk, all that danger, you walk away with just $10. Sounds crazy, right? But that's exactly what happened to me. And it taught me one of the most powerful lessons in crypto trading. Risk does not guarantee reward. Today, I'm breaking down not just that trade, but a bigger question every beginner needs to understand. Where is money flowing in this market? Bitcoin or altcoins? And more importantly, what could happen if Bitcoin hits a massive fair value gap at $104,000, bounces to $120,000, and lights the fuse for the next altcoin season? Stay locked in because by the end of this video, you will not only know how to spot these moves, but you will also understand why sometimes being right in crypto doesn't mean you get paid. Let's start with the story. I shorted Ethereum at $4,850. I used $50 margin with 300x leverage. That means, if the price moved just a fraction against me, my entire trade would have been liquidated. But here's the twist, I was right. The price dipped. My short was perfect, yet my profit just $10. And that's the irony of trading. It's not just about being right, it's about aligning risk and reward. High leverage, small margin, and tiny take profits can make you feel like you are making big plays, but in reality, you are gambling with dynamite and only lighting a match. The takeaway, in crypto, sometimes the real reward is the lesson you walk away with, and that brings us to the bigger picture. Bitcoin, altcoins, and how risk and reward play out on a global scale. If you are new to crypto, here's something you must understand. Bitcoin runs the show. In almost every bull market, the cycle looks like this. Bitcoin makes the first move. Once it pumps and cools down, money rotates into altcoins. If Bitcoin dominance drops, that usually signals the start of an Altseason, but the opposite is true too. When the market dumps, altcoins do not just follow Bitcoin, they crash harder. A 10% BTC drop can mean a 20 to 30% loss in alts. That's why you will often hear traders say, Bitcoin is the tide, altcoins are the boats. Right now, traders are watching one big scenario. What happens if Bitcoin pushes to $100,000 or more? Let's talk technicals. There's a fair value gap and imbalance zone around $104,000. Markets love to fill those gaps. Why? Because that's where liquidity sits. If Bitcoin runs hot into that level, we could see a sharp wick down to fill it. That move would liquidate late longers. Reset leverage in the system. Create a base for the next push. And then comes the big play. If Bitcoin bounces from $104,000 to $120,000, that could form a right shoulder on the chart, a weaker push where momentum slows down. And here's the secret. That slowdown is exactly when altcoins can explode. Historically, Altseason kicks off when Bitcoin dominance tops out, BTC stops trending and starts ranging at new highs. Traders rotate their profits into riskier plays like ETH, SOL, and even the meme coins. So yes, if we get that $104,000 sweep and a bounce to $120,000, we may be looking at the perfect ignition point for Altseason. So let's tie this all together. My little $10 trade on Ethereum showed me one truth. Being right does not always mean you win big, and on the larger scale, the same applies. You can be right about Bitcoin going up, but if you miss the timing of when money rotates into alts, you will watch other traders make life-changing gains while you sit on the sidelines. That's why understanding market structure, fair value gaps, and money flow is not just for pro traders, it's for beginners too. Because in this space, knowledge is the real leverage. Now, if you found this breakdown helpful, here's what you do next. Hit that like button. Subscribe to the Crypto Current and drop a comment. Do you think Bitcoin will bounce from $104,000 to $120,000, or do we break straight through? I want to hear your take. And if you are ready to go deeper, check out my next video where I break down the top free tools we actually use to track crypto money flow. Because if you can follow the money, you can follow the profits. Always do your own research. This is the Crypto Current, and remember, in trading, risk does not guarantee reward, but knowledge stacks the odds in your favor. This is not financial advice.